Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1614th edition of Short-Term Trading Live with Oscar Carboni. Good evening, traders. This 1614th installment of these educational videos is coming at you on a Monday night, early Tuesday morning, for Trading Tuesday, May 2nd, 2017. As we know, futures trading is extremely risky, causes substantial financial loss, is certainly not suitable for all traders. You must have risk capital to lose if you are going to play this game. You must know that placing stops is absolutely imperative to surviving in this game. Stops are your best friend. Now, in illiquid markets, your stops may not work, but in a market like the S&P E-mini, the odds are pretty high that your stops are going to work. Put your stops in. Don't worry about them not working. They are the only line of defense when you freeze. All right, traders, so what is on the board? What's on my board today is the E-mini S&P for trading on Tuesday. And you've seen this chart before, but let's look at what's happening right now, top day. So this could be a possible double top, right? Top one, top two. Market has come off a little since. You've got a gap below, illustrated by the words gap. We know that exists. And a green bull flag. Possible double top, a flag and a gap. My technical opinion is that the flag looks best, and we are absolutely going to be buying the dips in the E-mini S&P. We've got a green Omni. I like the flag, and when I show you the NASDAQ, you'll see why we should likely be expecting this flag to break out towards the upside, NASDAQ next. Traders, look at this NASDAQ chart. Sick. There is nothing you can think of on the short side, and why would you sell its sister, the E-mini S&P? You wouldn't. Not with NASDAQ looking like this. Looks fantastic here. So I'm going to stay with the buy recommendation in Omni. We are going to buy the dips in the NASDAQ. And then let's move over to the big kahuna these days. Gold. Look at this gold chart. Traders, this is sick. Look at this chart. What you had was this wonderful blue channel. You fell out of the blue channel. Started putting in this little pennant flag inside of, if you ask me, what looked to be a big bull flag building. So here's your green big bull flag. Let me just darken that in. And that's what I thought we had building. But then if you've watched the webinar I did over the weekend, I filled in this red pennant flag. I said, well, maybe it's getting a bit long in the tooth, this flag, being that the flag pole and now the flag are almost the same length. Green one. That's a little bit long in the tooth. Let's move it out of the way, and let's see if this is a pennant flag. And it turns out that that's what this is. We broke below the 200 bar moving average, and we've got projections that are a bit lower now for trading crude on, for trading gold on Tuesday into Wednesday. So pennant flag projects a down move. Breaking the 200 bar moving average projects a down move. Omni is bearish. We will be looking to sell the gold, rallies at least in gold. And I won't even show you the chart, but Omni is selling rallies in crude as well. Selling rallies in crude. So that's what's happening at livewithoscar.com. We're selling gold. We're selling rallies in crude. We're buying dips in E-mini, S&P, NASDAQ. And we'll see what else there is to play. Traders, come hang out with me in my free live trading room. No credit cards are required. It's at livewithoscar.com. Hang out with me. Watch what goes on here. I think you will very much enjoy the way we work these markets from Sunday afternoon's opening all the way until Friday afternoon's close. 24 hours a day, we work these markets. We're here to help you. livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do, in my opinion, to keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll traders. I will see you all at livewithoscar.com.